Hey, hello again. This is Vern with Tax Corp, and I wanted to bring up this is a really complex video. It's really only for certain people, homeowners who are looking to sell their property, real estate professionals who have people who want to sell property but they're unable to because of the federal tax lien. We've seen an explosion in the past 8 to 9 months with home sales in the United States. Interest rates are coming down, home values are going up. In certain areas of the country, like where we live here in North Alabama, it is red hot in this market. And a lot of homeowners and even business owners have real estate. And some people want to possibly sell some of this property, whether it's for investment purposes or they want to downsize or upsize their home, but they can't because of the presence of a federal tax lien. So just briefly, the tax lien, you don't pay your bill, you don't have or even if you don't pay your bill, and you may have an installment agreement where you're paying it on monthly. You're in compliance, but the tax lien is still there. Typically, if you owe more than $10,000 to the IRS, they're going to place a tax lien on any property that you own in any jurisdiction / county that they can find it in. So that tax lien is there, and that tax lien tells everyone else that, hey, the government has a interest in this piece of property. So if you're trying to buy it or sell a loan against it, you got to understand we come first. They don't always come first, but 9 times out of 10 they come first. So once that tax lien has been filed, you really can't do anything with that property until you satisfy that lien, except when you don't. And so what I want to talk about today is subordinations. They're called subordinations and relief from the federal tax lien. Now, a subordination, let me just go over these briefly. And these are for people who have a piece of property that want to sell it, or maybe even want to take out some equity in that property. Or if you're a real estate or mortgage professional and you've got clients, and this is really good for more real estate professionals because this opens up an entirely different market for you where, there's some homeowners that maybe want to sell their property, but because they have a tax lien, they don't even consider it. This is something you can put in your toolbox. So there's three type of lien actions that are out there: subordinations, discharges, and lien withdrawals. Subordinations, discharges, and lien withdrawals. So the first one I'm going to talk about is the subordination of the federal tax lien. So once a tax lien is filed, it puts the public on notice that, hey, we're owed money by the owner of this property and we need to get paid before anyone else does. That typically will stop any lender or purchaser from even approaching your property because they don't want to be tied up with tax liens. With a subordination, what happens is the IRS voluntarily moves out of the way and lets another party take their place. So with liens against property, the phrase is first in time, first in right. Whoever files a lien on that property first is the first one in line to get paid. Typically, when you buy a home, the first liener is always going to be the mortgage company. It's always going to be the mortgage company. Then if you have maybe an old credit card debt and they file a lien against you, then they're second in line. And then if you have an auto accident and you get sued, then they're third in line. As people come up and file their documents, they become first, second, third, fourth in line. Well, the federal tax lien has sometimes what's called priority, where they can jump ahead of people. But even with the federal tax lien, people want to stay away from it. So what the IRS will do in certain instances, they will say, listen, we know you want to sell this property. We will voluntarily move out of the way and let a lender, either a mortgage company or another buyer, go ahead and buy the property and have that transaction occur. And that lien will not apply to it anymore. Now, the IRS is going to want something for this. They typically want you to pay them something. But that is one thing that they are willing to do. Anytime the removal of a lien will enhance the government's ability to get paid, they're willing to do. And it doesn't always mean selling a piece of property and giving them all the money. Maybe you've got a huge mortgage and you've had to, you lost your job because of COVID. Now you're in a lower paying job, but you're stuck with this huge mortgage. So you want to sell your house and move into something of lesser value. The IRS may not get anything from the closing, but if you're now, maybe you had a $2,000 mortgage, but now you're going to buy a smaller home or rent a home, and now you're going to be in a $1,000 mortgage, well, now you have more money to pay the government for them to collect their debt. So what happens? They will voluntarily move out of the way. You just got to ask. The second one is a discharge from the federal lien. A discharge says, yes, the person still owns the money. And subordination, you don't get relieved of the lien. It's still there. You still owe. They're just moving out of the way and letting someone else take their place so that they can loan or borrow against it. A discharge says, we have a lien against all of your property, but we're going to remove this house or this piece of land or this rental property from the lien. We're going to exempt that one piece of property. We still have rights for everything else, but that one item is no longer covered under the lien. That is a second way that now you have full access to the equity in that piece of property and you can use it. And then the third is a withdrawal of the federal tax lien. A withdrawal basically says, yes, you owe us money, but we're going to go ahead and we're going to take this lien. We're going to remove it from the public record. We're going to remove it from your tax return, your credit bureau report. We're going to remove it from the county courthouse. It no longer exists in the public. That is a third way that you can get a piece of property removed from the federal tax lien, and then you are able to transact with it, borrow against it, sell it, whatever you need to do. So as always, we here at Tax Pro are here to help you. If you want a free consultation when it comes to subordinations of the federal tax lien, just drop us an email or give us a call. We'll be glad to discuss your options with you, and we're always here to help. So remember, if you've got some property and you've got some issues, you do have options. It is not a 100% guarantee, but I have been typically pretty successful. When I say pretty successful, maybe 95% of the time, if you fit the right circumstances, we're always able to get it. And as always, like I said, with the lien being removed, if the government it's going to be easier for them to get paid, they're going to move out the way. So like and subscribe to our channel. And if you have any questions, give us a call. Have a great day.